All righty, welcome to the Move to Florida seminar, Central Illinois division here. My name is Mindy Sylvester, and I am coming to you from beautiful Naples, Florida. And I am not going to be one of those people to rub it in that it was 65 degrees and sunny today, because I know you guys are dealing with some pretty chilly temperatures. But I'm excited to have you all here. We have so much information for you today. We have Mckenzie Sylvester with Remax Rising. She's going to be talking about preparing your home for sale, listing your property. And Grant Bellis with First State Mortgage is going to be talking about, did I say that right, Grant? Yes.
Yeah.
First Court is going
Yes.
to be talking about financing options. Blake Mier is going to be talking about all the benefits of moving to Florida. And we're not even just talking about the sunshine and the year-round boating, minus a couple of weeks here and there, and all the other benefits, but really all the great financial benefits. Adam Bock is, I think, going to have some good news. Adam is with State Farm. He's hopefully going to have some good news for us on the insurance front today, but we're going to let him talk about that. And then, of course, I will be talking about the Florida real estate market. Hi, Stacy. Hi, Denise. Ashley. Welcome, everyone. All those people watching on YouTube. So let's kick it off with Mckenzie. So now, if you're watching this on YouTube and you are not in the Central Illinois market, well, obviously, we can get you information on the market where you're at. But for all of this in Central Illinois, Mckenzie has some really amazing information for us.
Yes, I'm going to start with some stats. I'm going to go over a little bit just about Bloomington Normal, and then I'll do some stats on McLean County. Again, if we need to do Woodford County, Livingston, or elsewhere, we'll do that. But I'll just kind of stick with that for the time being now. So I'm going to go over the stats of kind of what's been happening since the beginning of January. So showings, we now can track our showings. We schedule them through an app, and then with our lockboxes, we can track this. So all different price ranges and all that good stuff. So from last year, they were down, they were about 237 for the week. And then this week we're at 375. Even last week they were 365. So every week we're getting a little bit more showings. And this is just for Bloomington Normal. This is not for McLean County. Each week so far this year, we went from 265 to 313 to 382. You can see that it's going up, which is good. The only week it did go down was when we had our little snowstorm. So obviously nobody wanted to get out during that week. As far as our pendings, we were around 20 to 28 pendings per week. And then now this week we've jumped up to 39. So things are really picking up. There's more buyers out there. And then what everyone really wants to know, what price range is it great to sell? I mean, pretty much from 200 to 500. If you're in that price range, it's a good market. We're getting pretty much around 99 to 101% of asking price, and things are selling pretty quickly there. For McLean County, and again, I'm taking Bloomington Normal out of these stats to make it easy. The average active homes is about 29 to 33. There is nothing on the market right now between 300 and 350, 450 and 500, 550 to 750. So you don't have any competition whatsoever.
There
And
are
then
literally no homes on the market in that price range.
not in McLean County. And then
Wow.
there's only four homes between 399 and a million. There's only four homes to choose from.
Wow.
I know your stats are going to be completely different than mine.
Yeah. But so great. Yeah. And by the way, I forgot to mention we are going to have question and answer in the end.
Yep. So yeah, the pending sales this week, last week we only had four, and this week we went up to seven, so almost doubled there. And for the McLean County, between 250 and 350, that's the hot market right now. They're selling between 99 and 102% of asking price. So if you're in that range, or again, if you're in a different area, you want to know something about Woodford County or Livingston County, somewhere like that, reach out and we can give you all
Yeah.
that good information.
We'll put all of our contact info in the chat too.
Yep,
Mckenzie,
absolutely.
do you know what is your average days on market?
It depends on, the price range. But a lot of these, they're selling, in about 2 weeks, most of them.
Wow.
There's some, like our new construction's still doing pretty good. There's a few when you get obviously up to, over 750. they tend to sit a little
Yeah.
longer, and then under 100 they're sitting too. But
But it's still obviously a seller's market.
yeah, I mean, really, and again, it's completely different than what you're doing down there. I mean, all
Yeah.
price ranges are selling. um, yeah, yours are going to be completely
That is
different than
what
mine, but
is so
it's still good here for sure.
Yeah, that is what is so incredible. You guys have been in a seller's market for so long now. And I think I've been selling real estate for 26 years now. This is the first time in my career that I have seen where someone can sell their home in a seller's market in Central Illinois and buy in a buyer's market. Like that rarely happens. Like
Yeah.
they're extreme. Like it's a really good seller's market and it's a really good buyer's market down here. So that doesn't happen very often. So what an amazing opportunity. Like this is just perfect timing for people who have to sell and then buy. It's incredible.
Yeah. We're how many showings per listing until they go under contract? We're at about 5.8 showings until your house sells for the Bloomington normal market.
Wow.
So
Yeah.
not too bad. And sometimes you a certain of those price ranges you can get, 5 showings a day, and so there's your one day on the market. But
Our average showings per house is 1.5 per month.
oh gosh.
Wow.
1.5 per month right now.
Is that just for Naples or is that
That's
like your county?
Naples.
Yeah, Naples.
Yeah. It's an
That's
incredible
crazy.
difference. Yeah.
Yes. So a little bit too, some people need to sell or they want to get completely out of Illinois and move down there, be done with this winter. And they have to sell it in order to buy down there. So some tips about getting your house ready to go on the market. Like I said, things are picking up. I've had some sellers that I've been telling, let's just hold off. The kind of house you have, I think we'll be better off if we wait a few weeks. I'm just checking those numbers nonstop to see, when I can really see that the showings and that their price range jump up to give them, the best opportunity. Again, like right now, we still have snow on the ground. So that's kind of what I'm waiting on as well, is waiting for some of this to melt a little bit. Even if I've got some buyers, or sellers maybe in March, you never know, it might snow again. So if I can get an opening here in the next couple weeks to get pictures done, I try to do that, at least get the outside one so they said there won't be snow in the pictures. And doing landscaping and things like that just to try to make it look different. I know when I go with my sellers and we meet in the fall and they know they don't want to move till spring, I still will have them take the picture in the fall when there's still leaves on the trees, the grass is green. So that way, if they do list their house in February, they're the only photos with no snow. So just to try to get some more attention out there. But
Right.
right now it's tax time. They're trying to get things done with their house, freshening up paint, flooring, decluttering, all that good stuff.
Awesome. Okay, like I said, we'll have questions in the end. And of course, if you're thinking about selling, you just call Mckenzie. And Mckenzie, will you put your number in the chat right
Yep,
now?
for
And
sure.
then if you have any questions about your specific neighborhood or the market or, your home specifically, obviously Mckenzie will set up a private meeting with you and answer all the questions about your home and how you can get your home for sale. Did you have anything else you want to tell us, Mckenzie?
I'm not at the moment. We'll see if anything
Questions
triggers
come up?
my brain
Okay.
when you guys start talking.
Okay, that sounds good. Okay, Grant. So they're going to sell their house. Mackenzie's going to get them top dollar, sell it in 2 weeks. What's the financing situation? How do they finance to get to Florida?
So there's a couple of different ways that we can do this here. If you're going to sell first and buy down here, we can do with as little as 5% down. So as long as it's going to be your owner occupied primary residence, okay? If you're going to buy down here first and sell in Illinois later, then we could do it as a second home, and there we would need 10% down. So the thing about it is there's three different ways that you can own a home in today's day and age, according to Fannie Freddie guidelines. And number one is an owner-occupied primary residence. Number two is a second home, and number three is an investment property. And so the way that they look at this is that if it's your owner-occupied primary residence, that's going to get you your best rates, lesser down payment, things like that. If you're going to buy it as a second home or an investment property, the rates on there, you can usually add on about 0.5% to whatever the standard owner occupied primary residence rates are, and do it that way. But we can do whichever way you guys would tailor meet whatever needs that a particular buyer would have. If you're going to buy it as an investment property, then we would need 20% down though, where second homes is 10%. So one thing about it is if you're thinking about buying this as an investment property and you're going to rent it out, if we can, and you're not planning on, say, coming down here and moving down here for another year or two, and you want to rent it out for the whole year, I can use that rental income to help offset the payment. So that's something to, for qualifying purposes. And there's other ways that we can do it too, that if you're over 59 and a half years old and we've got money in retirement, we can use some of that money to offset debts if, a debt ratio issue is a possibility, kind of thing like that, to buy down the debt ratio, if you will. So there's various and sundry ways to do this, and it's really just a matter of each individual person's what their goals are to make that happen. But long story short, 5% down owner occupied, 10% down second home, 20% down investment property.
Grant, does that go with condos too, or does that change a little bit with condominiums?
Well, there again, condos, you're going to run into some things with maybe what's called non-warrantable condos, and those are condos that don't meet Fannie Mae, Freddie Mac guidelines. And there's a questionnaire that we can send out early on. If a buyer is interested in maybe making an offer, chances are the condo complex already has a questionnaire because it's standard for Fannie Freddie guidelines that we could get our hands on and make sure that it is a warrantable condo, because that's one thing you definitely want to take into consideration, because if it's a non-warrantable condo, they're going to be tougher to get financed.
Okay. And people always talk about bridge loans. What do you think about those? Is that something that you recommend? Is that something you do?
We do have those available, and that is a way to do it. But I tell people all the time, I'm all about cheap. What's the cheapest way we can do this, doodad? And so I kind of want to talk to you about what's called recasting your loan. Okay. So let's say you have a home up in Bloomington, and let's just use a round number of 300,000 is what it's worth. And let's say you maybe owe 200 on it, or you're going to net $100,000 of equity after you pay all the closing costs and everything that have to do with the sale. So let's say you net 100,000. You find a place down here for say 300,000. We can do a bridge loan for you, and I can loan you up to 90% of the equity that you have in your home. So in other words, if your home's worth 300, I can loan you up to 90% of 300 minus whatever you owe on it. That's one way to do it, but there's a cheaper way. And what I usually tell people is you can borrow from your 401k. If you don't have 5% of your own money down, you can borrow from your 401k to put 5% down. Then when you sell your home, you can take and pay back your 401k loan, and then take and put the rest of the money down on your home. And anytime after your second payment, again, you can do what's called recast your loan. That's different than refinancing your loan. And what I mean by that is, let's say you buy a home for 300,000, you put 5% down, that's going to be $15,000. Well, now we're going to fast forward 2 months. You've already made your second payment, and now you're sitting on $100,000 in cash from the home that you just sold, and you want to pay that money down. So now you owe $200,000 on the home. So the lender will send you what's called a loan modification agreement, where they will say, because you want to put it in writing between the buyer and the lender, that hey, if I pay you 200,000, or pay you 100,000, I only owe you 200,000. I have 358 payments left on 200,000. They will lower your monthly payment, and they will take and remove the PMI because you put 5% down. So you'll only have the PMI for 2 months. So yeah, you might have $75 or $100 a month in PMI for 2 months, but it's a lot cheaper than $1,000 or $1,500 in a bridge loan. And the bridge loan, you're going to pay a higher interest rate on as well. So that's another, avenue that we could, I would strongly explore for borrowers to do it in lieu of a bridge loan, but still accomplish the same thing.
So you're kind of giving yourself the bridge loan then, right?
That's exactly what you're doing.
That's a great
Because
idea.
again, keeping in mind, you're borrowing from your 401k. This is not a long-term thing. This is a 60-day loan. So you borrow from it. You might have to pay a $25 or $50 application fee to your 401k people, but at the end of the day, that's not nominal compared to what your bridge loan costs would be.
Wow. Now, Grant, keeping in mind that none of us can predict the future, what do you foresee rates doing this year? Do you have a feeling or?
Well, in my 37 years of doing this, I'm just kind of going off gut and looking in the same crystal ball everybody else is, but I think we are primed for lower interest rates. I really do. And here's the reason why. Wall Street, for some reason, can be kind of finicky. And Blake, you can go more into that on your spiel here. So I
Yeah.
don't mean to steal any of your thunder, but at the end of the day, what it boils down to is, the Trump administration just said that they're going to buy $200 billion worth of mortgage-backed securities to help lower interest rates. Meanwhile, last week we had the consumer price index come out. And at the wholesale pricing level, the measure for inflation was at 0.2, which you annualize that comes up to 2.4. Well, the feds have already said that they want to keep inflation around 2%. Wall Street's take on it was it's supposed to be at 0.3. So it beat expectations in a positive way for lower interest rates. Third, and another important fact is what's called non-farm payrolls. They came out last week and Wall Street was expecting 50,000 jobs to be gained. And actually what happened, there were 50,000 jobs lost. Those three things alone right there are good indicators for lower interest rates. Now, why Wall Street hasn't picked up on that yet, it's one of those things. We're right sometimes, we're wrong sometimes as a consumer. Wall Street is never wrong. So it's the thing of you got to look at it that with those things right there, those numbers that Wall Street we should be getting lower interest rates based on those facts.
Interesting. I hope you're right.
So
I think you are.
yeah,
Thank you, Grant. Grant, will you put your contact info in the chat, please?
for sure.
Thank you. Again, we'll have questions at the end. So now, Blake, now I can sit here. I grew up in Bloomington. I love the fact that I grew up there. I think that it has the greatest people on the planet. I love my family and friends and the restaurants. But I can give you 100 reasons why I love living in Florida and why the lifestyle is so much better, not just counting the weather, but just life in general, not having to go through the hard winters and scraping windows and shoveling snow. But Blake, will you please talk to us about the financial benefits of moving to Florida?
Yeah, it's a real thing. It's real dollars, and it really boils down to taxes, taxes, taxes. I mean, if you look at just an overall review of the state of Illinois, we almost always come up as one of the worst overall tax states there is. And on the other end of that spectrum is Florida. Florida's usually rings in at the number one or two in terms of the more tax-friendly states. So there's lots of different ways taxes come into play with a move like this, and in every one, Florida's a better environment. It's at least the same, if not a better environment than it is in the great state of Illinois. The first and maybe the simplest is the state of Illinois has a 5% state income tax. So every dollar you earn on wages, on investments, on dividends, income, any kind of passive income, anything you're doing, the state of Illinois feels like they deserve 5% of whatever that is. That number in Florida is zero. There is no state income tax in Florida. So right off the bat, you're ahead by that amount. But there's a lot more to it as well. Another aspect of it is that in the state of Illinois, your one thing that sometimes I hear people talking about when they're trying to look for a bright spot in terms of what's going on in taxes in the state of Illinois is that the state of Illinois does not tax your distributions from retirement plans, from 401ks, from IRAs, those kind of things. That is true. It's also true in Florida. So that's not a give up at all. And frankly, if you listen to some of the politics around here, that's actually, I cannot believe that I'm hearing it, but some of the politicians are talking about taking that away. It's literally the one thing that Illinois has right in terms of taxes, and it's in discussion to take it away. So that one's a wash. You're just as good in Florida. In terms of property tax, the state of Illinois is on the list of one of the worst in the country. Just as an average, obviously there's a wide range of house values and tax rates, but on average, the property taxes in Illinois are 3 times what it would be on a house of a similar value here, and it's 3 times more in Illinois than it would be in Florida. So there's a huge difference there. Uh, Another one is if you're a business owner, the corporate tax rate in Florida is about half of what the corporate tax rate is here in Illinois. In every category, it's at least as good, if not significantly better, in Florida. And then a very big one when it comes to legacy planning. This doesn't impact everybody, but it does. It's kind of it's the worst case scenario. In the United States, you have a $15 million estate tax exemption in almost every state. In about, I think, 42 or 43 states, the national exemption level is 15 million. So that means if your estate is less than 15 million, estate tax, which is about one of the worst tax rates there is not a factor. Not only is that a high number, it's indexed for inflation. The great state of Illinois, the number is 4 million. So if your estate, and that includes property, houses, assets, investment assets, everything else, if that's over 4 million, then you've got an estate tax problem. And I can tell you, I have firsthand experience of people that are leaving the state of Illinois because they basically said, I can't die there. If I die there, it dramatically impacts the well-being of my legacy and of my family. So that one doesn't necessarily impact everybody, but if it does, it's a huge number, and it's a really big incentive to get out of the state before you pass away. So it really is it's a no-brainer financially that you're better off in Florida than you are here in Illinois. A very good friend of mine is in the process of figuring out where he wants to land in Florida. I think he's talked to Grant a few times. Grant even offered to take him out on his boat, which I thought was pretty good. A pretty good sales technique. He's a very detail-oriented guy, and he said, Blake, I ran every number, everything I could do, and he said, I would have had $37,000 more last year if I had lived in Florida rather than being in Illinois. And this is a guy makes a pretty good living, has a pretty nice house, those kind of things, but he's not fabulously wealthy at all. So it's all those things, every aspect of it add up, and it's a no-brainer that financially you're better off being in Florida than you are here. Evidence of that is in the state of Illinois, we are number one in net out migration. Like, people are just scurrying from this state. And it's amazing that our town, that Bloomington, is maintaining a seller's market when most of those people are leaving from Chicago. That's where a lot of that is coming from. But we are literally number one in net out migration. Florida is number one in net in migration. I think that's a little bit more of your territory, but that's smart money. That's what smart money's doing. Not only is it a better lifestyle, it's a significantly better financial outcome. So there's so much can be done by getting out of the state of Illinois. I hate to say it, I'm a longtime townie, but there's a pretty good argument to head south and get out of here.
Yeah.
One last thing, Grant, what you were talking about, absolutely with a 401k loan, that works. If it really is going to be less than 60 days, it's even a little bit easier. You can just do a distribution from an IRA. And if you get that money back in the IRA within 60 days, it's like it never happened. So you're really not even borrowing the money. If it's going to be more than 60 days, then you would be looking at a 401k loan, that kind of stuff. But if it's really just kind of getting the deal done stuff and it's 60 days or less, that just take a distribution from your IRA. And as long as you drop it back in there within 60 days, there's no tax consequence. There's no interest paid. There's nothing to it. It just drops right back in.
Wow, that's great.
Yeah.
What kind of services do you offer? Like, say someone is like a year or two, or maybe 5 years out from moving to Florida. Do you offer like financial planning services, or what do you offer that can help get someone a plan so that they can get out of there and get to Florida?
Yeah, so I am a CFP. I'm a certified financial planner, and that's most of what I do. Uh, and I can tell you, I have helped people with this exact equation. People from Illinois that want to move south, want to get out of town, both lifestyle and financially. And it's even if you're a few years away, we can start kind of putting the pieces together so you've got a better idea of what it's going to look like, and you have realistic expectations as to what your financial life is going to look like. So that's, even if you're not quite ready to do it yet, that's definitely a part of a plan that we can build for people, so they have a sense of uh, uh, what kind of things they should be looking for when they get down there.
Right, exactly. Great. Well, could
Mhm.
you put your contact info
Yep.
in the chat? If anyone has any questions and want to meet with you, they can contact you.
Great. Sounds good.
That's great info. Thank you, Blake.
Thank you.
Okay, Adam, you have been on the topic. Everyone is talking about homeowners insurance, insurance in Florida. We've been getting a really bad reputation. So, Adam, will you educate us on what the Florida insurance market is really like and what you foresee happening in the future, the near future?
Sure. Let me start by saying I spent 11 years in Bloomington, did two corporate tours at State Farm, and I'm sitting in my office. Yes, this is a background, but I'm wearing my North Face because it's freezing down here now, and I have no excitement to go back to Bloomington anytime soon. So
Okay,
I'm
but
happy.
hold on. Can we just clarify when you say that it's freezing? Because my thing says 57. Okay. So,
Well, last night it was 37 here, so
but when
I'm
you move
just
to Florida, like freezing is anything below 60, really.
70 maybe. But yeah, let's talk a little bit about insurance. So, when it comes to the market here, you're seeing a lot of advertisement in Florida about, oh, the Department of Insurance is changing things and they're pushing back on carriers that have maybe somewhat inflated rates at times and they're getting refunds. That's true through some of your insurance products like homeowners and autos, but it's not across the board. So not every carrier was kind of accused of gouging policyholders, and so not all of the rates are going down. The good thing is things are more opening up more here in the insurance market. Now, I'm a captive agent for State Farm only. I do have the ability to write through other carriers, what we call the clearinghouse, which is Citizens, our state-run insurance carrier, and a few other carriers that will give us agreements with them to get new business. But what I'd really like to talk about, Mindy, if you don't mind, is just a few things to be aware of. Living in Bloomington, Illinois, you're kind of used to probably having auto insurance around $200 every 6 months, something like that. Maybe your homeowners is maybe maximum $500 to $700 a year. When you come down here, don't expect those rates to be the same here in Florida. We love all the people that are coming down this way, but there's a lot more accidents because of the different style of driving and everywhere else that's doing that. So the
When
rates are
he
going to
says
be
different style, you mean they turning left from the right lane, right?
yes, that was one of those things are going 60 miles an hour in the fast lane on the 75 freeway with their hazard lights on or something,
Right.
I mean, so there's a lot of that going on. The other thing with the auto market, I'll just talk to this real quick, is Florida's auto market is kind of difficult because they're one of the only states in the union that doesn't require people to carry bodily injury liability coverage on your auto insurance. And so what that does is that increases your uninsured motorist coverage uh, cost when it comes to bringing your cars down. So they're not required. They're only required to carry two things on their auto policy. It's what we call uh, 10,000 in property damage liability. So that pays for the car or whatever they damage, and then personal injury protection. That's where we get the term no fault from. That's the only coverage in the state of Florida that's really no fault. And all that is $10,000 in medical payments that are paid to you and your passengers when you're injured in an accident. And you're required to carry that in Florida. So that being said, auto insurance is not going to be what it looks like in central Illinois. down here in Florida. It's going to be a little bit higher. So I would just say, with that expectation, I don't want to push anybody away or draw negativity to Florida. Florida's great. I love it down here. Been here 6 years. It's just you're going to pay a little bit more for your car insurance because of the way that the market is set up and what they require in order to register your vehicles. When it comes to homes, though, there's a couple of things I kind of made notes today about 5 things I really wanted to talk about. And as you're looking into buying your home, uh, I'm going to give you some pointers that you're going to really want to think about with your excellent realtor here, Mindy, who can help you out, and she'll make sure that you're able to insure the property. Um, because there's a lot of carriers that are out there that are kind of backing away from the market. State Farm is one of those that they keep changing their guidelines on certain lines of homeowners insurance. For instance, our dwelling policies, our HO3, we've now increased the eligibility in order to write with State Farm, you have to have Florida building codes. So I'm going to talk a little bit about Florida building codes in just a minute. Um, but other carriers are opening up more. The Citizens market, which is the state-run kind of your insurance of last resort, is not the fastest growing insurance carrier any longer in the state of Florida like it has been the last 2.5 years. What they call depopulation has happened, and they're pushing policies out to private carriers. And so they don't want to be the largest insurance carrier in the state of Florida. They want private carriers to take on that risk. So let's talk a little bit about some of these. As you kind of come down and you want to decide, like, I'm looking at this property and I really like it, a couple of considerations I would tell you is try and shop the insurance or get a quote on a property before you actually make an offer or purchase the product or the home. And the reason being is because some carriers won't pick you up, and you might get stuck if you're going to have a mortgage or one of those, a lien holder or something like that. They may require you to be with a certain level carrier, so like A plus plus carrier in order for their loan to be secured. But let's talk about this. First things first, when it comes to home, condo, or rental, things to consider: age of the home, not when it was built, when it was permitted, and what the Florida building codes were when it was permitted at that time. So it's not like buying insurance in Illinois, kind of where you can just probably find it anywhere. It's a little bit more difficult and challenging because of the Florida building codes. The Florida building codes are codes that are in place from the state on what they require in order to get a permit, in order to protect your homes from wind and hurricane. And so those keep changing over and over again. So first thing I say is age of home. Check it out. You can go to any of your county appraisals websites. You can see when the permit was issued and kind of give you a gauge of what the Florida building code was at that time. The next thing is to consider is the proximity to the water and your flood zones. If you're not looking at where you're at, I know everybody has a dream to be right on the ocean and staring at the Gulf all day long, right? Great dream. Difficult to insure at times. Okay, I'll be honest with you. Just because a lot of people don't want to take on that risk, a lot of carriers, but also your flood zone. So when it comes to a lot of your mortgages or your lien holders, they are might require you to purchase flood insurance. And flood insurance, as we know of today, since the government is currently shut down, is not even being sold in the state of Florida at the moment. It will be. It will open up once the government opens up again. But you kind of want to kind of know where your flood zone is. So those are two important things there. The next thing is if you're going to buy a home or you're going to buy a condo, check out the HOAs. Is the HOA covering the dwelling on the exterior side, or is it not? Because we do have some that are condos that are true HOAs that cover the exterior of the dwelling. And then we have some that don't, they have an HOA, but they don't cover the exterior of the dwelling, which means that you have to purchase a homeowner's policy versus what we call an HO6 or a condo policy. So kind of some things to study as you kind of look at what you're looking to buy and where you want to buy at. Number 4, make sure when you go and your offer is accepted, that you not only just do a home inspection just to see what needs to be repaired or fixed before you purchase the home, also get a 4-point inspection. In the insurance market, we don't really want to send in the report of or the inspection report that has everything in it from maybe a leaky pipe in this closet to that to the insurance carriers. We only want to look at the 4-point inspection and utilize that to get you the best rate. And a 4-point inspection, what that looks at is it looks at the roof, the age of the roof, type of roof it is, the HVAC system, your plumbing, and your electric. And so we really only want to focus on those 4 things. If we send in the full inspection report, we can usually get that turned down from underwriting and we get pushed back because there's other things in there that now we have to prove that, oh, the leaky shower or the shower head that was dripping or the ice maker that doesn't work, we need to see those fixed. So just kind of help yourself out there. Order the 4-point inspection. It's not that expensive. And the wind mitigation form. So the next one is the wind mitigation form. What that is that's a report that can be filled out by your inspector. It's going to talk about how the roof is built, how it's held to the walls. It's going to talk about hurricane and wind protection. And those are huge discounts when you move down here to Florida. Like I said, the homeowners insurance is going to, or condo insurance is going to be a little bit higher than it is, probably a lot higher than it is in central Illinois. But you're really going to want to get those 2 pieces of information outside of just the normal inspection. So a 4-point inspection and a wind mitigation form. That's going to help you qualify for some carriers that may require that just to be qualified or eligible with them. And then the last thing I would focus on is the replacement cost. So you might be looking at a home here in Florida that costs $300,000 as a market value, but the replacement cost is different than the market value. We're not insuring the land that the home is sitting on. We only want to insure the dwelling, and we want to make sure that the replacement cost is going to replace what you currently have um, that you're purchasing. So many people get confused. They're like, "Oh, well, I'm buying the home for 300,000. I need to have $300,000 insurance." No, you actually probably don't. It's good to sit down with a licensed agent and go over the features of your home inside and out that are going to give you an actual replacement cost. Most carriers down here have an inflation rider that every year the cost of the home or the replacement cost goes up about 3%, especially with State Farm, we're at 3%. But you're going to want to reevaluate that every couple of years just to see what it would cost because building costs go up. Uh, in a catastrophe time, like when we get hurricanes and whatnot, the building costs go up a lot more because there's not enough supplies and there's so much demand. So those are like the main 5 things that I would say. I would also include one of the biggest things that I see in my role is mold and fungus. And so, a lot of things don't burn down here in Florida as much. What we get a lot of water action. That's probably our biggest peril as far as hurricanes, floods, and leaking pipes inside homes. So make sure you look at a carrier that has a mold fungus endorsement because as soon as anything gets wet here in the steamy state of Florida, it gets really moldy very quickly. So I'll stop there. You have any questions for me, Mindy, or anything else you need me to answer?
No, I think you did a great job. That was a lot of really great info. So, obviously, when you're thinking about moving to Florida, we'll definitely connect you with Adam because he is definitely a professional. He will take care of you and make sure you don't overinsure and underinsure and just get the right policy for you. So, and you put your contact info on there. So, thank you. And if anyone has any questions at the end, we're almost finished. I'm going to talk about the Florida real estate market. So, as I said already in the beginning, I am in Naples, Florida. I handle Southwest Florida. I have a very large team of 50 people. We handle all Cape Coral, Fort Myers, all the way up to north of Tampa. We have agents in the Panhandle area. So we've got agents all over the state of Florida. But as far as the market in general goes, it is definitely a buyer's market, as I said. Now, you may have seen Grant. You probably noticed this as well. Is it happy hour time, Grant? Did I miss happy hour? We should have all brought drinks. I mean, it is happy hour time. What were we thinking? Um,
That's my Diet Coke fix I gotta have.
um, like chug, 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 chug. Okay,
Yeah.
so Grant, you might have seen the articles. They said Cape Coral is the worst market in the country. Like they were saying that. So, but what does that mean? The worst market in the country? to me, that means a great time to buy. Like, what opportunities? If they're saying you're the worst market in the country, it's only bad if you're selling. It's not bad if you're buying. It's great opportunities. So, as far as our market in Naples, yes, we do have higher price points than most of the state. So, but again, just like Blake was saying, you know, you're going to save money on taxes. Like, we pay a little over 1%. You guys are almost triple that. So, although you're paying a higher price point for homes, you're saving money on taxes. So, I personally would rather pay for a home and a mortgage than to pay taxes. So, charge me more for the home than just throw away money in taxes. Another great thing about Florida, I'm getting off track for a second though, but in November, we are voting on whether or not we're going to abolish property taxes. Okay. And I don't know who's going to vote no. If you vote no, will you just call me and let me know why? Because I'm super curious as to why you would vote no. So that I believe is going to be another driving force. I think our market is going to pick up. Right now in Naples, we have about 6,400 homes for sale. A little bit different than Bloomington, right, Mckenzie? We have 6,400 homes for sale. That's about 8 months worth of inventory. So that means if nothing else came on the market, it would take 8 months for us to sell everything we have. Now, a normal market is about 5 to 6 months worth of inventory, meaning it's not really a buyer's market and it's not really a seller's market. Now, historically, 6,400 homes would be a normal market. But because our pending sales, the number of contracts we're getting is so much lower than it has been in the past few years, that's 8 months worth of inventory. We actually, about a year ago, we had over a year of inventory. So we got up to about 7,500 homes for sale. That is a lot of homes for sale. Now, I don't get into average prices or anything like that or median prices because we have $295 million houses. An $80 million home came on the market today. So we have our averages, our average prices. I don't get into, but we do have more opportunities than we've had. This is the best market to buy in over 15 years. So we have a lot of motivated sellers. And yes, Naples is a little bit more expensive, but just a little further north and even central, Cape Coral, Fort Myers, Lehigh, Estero, Charlotte County. There are some single family homes in the high 300s. You can get a new construction home for high 300s, 400s in some of these areas. So there are different price ranges for all different people. We have condos in the 200s again. We didn't have anything in the 200s for years. And again, I think I think the Florida market in general is very similar to Naples. However, I think there are even better buying opportunities well, I know for a fact that Lee County does have better buying opportunities. They have more inventory. Same with Charlotte County and same with the Panhandle, which seems to be really popular places for people in Central Illinois to go. So right now, it is a really great time to buy. Um, as Grant said, interest rates are coming down. A lot of benefits to move here. If you have the opportunity to sell high and buy low, I can't imagine what the downside of that would be. So, obviously, if you call me and let me know what areas you're thinking about purchasing, what type of home you're looking for. The thing about Florida that a lot of people don't really understand moving from the Midwest is we have different lifestyles. In the Midwest, I feel like you have a lot of very similar neighborhoods. Maybe you have a golf course or maybe you have a lake. But we have different lifestyles here. We have golf, we have resort style communities, bayfront, beachfront, downtown living. We have acreage. So there's so many different ways you can live. So I'll help you determine how you see your life. Do you see yourself like just walking out on your dock and jumping on your boat or looking at a golf course? There's so many different ways to live. So if you just contact me, I will go over the market specifically and what will work exactly for you. So I have my contact in there. And I guess we can open it up to questions if anyone has any questions now.
Hey,
Did we?
Grant, I just wanted to say, I don't know if you saw the chat, but you have an
Yeah, I
extra,
did. Yeah, let me change that around.
just so you
Sorry
could
about
text it.
that. Yeah.
No,
Thanks.
Thanks. That's another good point to Adam's attention to detail.
Yeah.
Adam, I did think of a question for you.
Sure.
You were talking about replacement value, and I want to know how you get to that. I got an interesting stat. We're talking about adding on a little bit to our house, and we were told it's $500 a square foot to add on. So I just wonder, do they go by price per square foot when they do replacement value?
No, we go by features and amount of space. And so, like, if you're going to add on to your house, who's saying $500 a square foot? The builder?
That's what it would cost me, $500 a square foot if I wanted to add on. If I want to add on 1,000 square feet to my house, it's going to cost me $500,000.
Okay. Yeah, that's the inflated prices of what the materials are and the labor.
Yeah.
We're looking at it as far as what are the features that you have. So
Okay.
when we look at the space, what's the flooring look like? What's on the walls? How much space is it, right? Um, it's all a calculator that we use, and that's
Okay.
how we add it up.
Okay.
For condos are a little bit different. If you look at that, we're looking at the same kind of features, but we're not insuring the exterior or the roof. So it really comes down to how lavish is the interior of the home. Typically, we range from 80 to about 150 per square foot on a condominium, until you get to, like, some of the bay shores and the super condos that are on the ocean, and then you're talking a lot more. But yeah, probably for your house, it wouldn't be what you're being charged. It would be a lot less than that.
Okay. Interesting. Okay. Anyone have any questions before we call it a day? All right. Well, obviously, we all have our contact info in the chat. You can contact any of us for any specific questions you have. We'll help you get out of there, move to the Sunshine State, and live your dream life. So, thank you all for being here. You guys are such great experts. It's so nice to know that, you know, moving across the country can be so daunting, but to have a team of professionals that know that each one of us can help handle that, there are maybe 10 things to do to move to Florida, but the only one you got to do is number one, pick up the phone and call us, and we're going to handle the other nine, right? We've got you. We've got everything step by step. This is what we do, and we will make it super easy for you. So
Hey,
thank you
Mandy,
guys.
just to let the folks know that are from Bloomington Normal or just Illinois in general, we do have a steak and shake in Naples if that interests them as well.
When I lived down there, I went there a lot. That was the only thing I had from home.
I know, I love it. I mean, not that I ever go. All right, guys. Hey, thank you all so much for being here. We appreciate it. And you guys have a great night. We hope to see you in Florida soon.
Thanks,
All right, good
everyone.
evening.
All right,
Yeah,
Bye.
bye, guys.
thanks everyone.
Thanks for everyone.
Bye.